without further ado, I'd like to welcome my guests, the panelists. First of all, Thomas Meier, the Chief Operating Officer and Interim Chief Executive Officer of Jumeirah. Siegfried, Nierhaus, I hope I said that correctly, Vice President and Head of Development, Middle East, India and Africa at H World International. And last but not least, Mohannad Mosly, Vice President at SEDCO Capital. I felt like I butchered your names. So without further ado, we'll start this panel to discuss how strategic fund restructuring can help the hospitality landscape, whether it's from the region to the global landscape, or it's from the global landscape towards our region here in the GCC, or more specifically the UAE. Mohannad, I'd like to start with you actually. So why do funds or fund manager consider hospitality an attractive sector for investment?
Yeah, thanks, Paula. Pleasure to be here. So some fund managers like to maintain a diversified portfolio across real estate sectors, but more specifically the hospitality sector, because it's a hedge against inflation. And historically, as an asset class, it has outperformed inflation since the 1970s. So this provides some sort of resiliency to the portfolio and, by extension, the investment itself.
And how do you see this in this specific region? So how is it attractive in our region, the MENA region or the GCC per se?
I mean, I think I'll speak about the UAE and Saudi. I think tourism has been at the forefront of economic growth. You look at Saudi Arabia, a lot of the global events that are currently being hosted, but that's not going to stop there. You have the Asia Cup, you have the World Cup, you have the Olympic Games. So this creates for a lot of demand for the hospitality sector across all segments.
Siegfried, also, how do you see the hospitality industry here in the region? So you have hotels across the globe. How do you assess this region specifically?
I mean, we are blessed to be in the region here since in an office 10 years with our company. The region, and we have seen the presentation earlier today showing that this is the most dynamic market in terms of growth, and we have experienced since over 2 decades now the growth in that region, which initially has been put a question mark on every face. Is that really possible, and will that really happen? But it really happened, and it transformed, and we are sitting here in this ever-growing Dubai, which is growing and growing, and it doesn't seems to stop with amazing results for investors, for clients, and for staff members to develop the destination. So the company, the destination has proven to be solid, has proven to be profitable, sustainable, which is important for the growth in this part of the world. And we have seen from an investment perspective that initially the funds are here. We have seen that the different countries, they have their own funds and would like to develop their own destinations, which is a must. But now it's going into finding investors coming here and putting more and more funds into that and creating all kinds of partnership in order to allow the development to grow. And if we talk about this market, and we all know and have seen since decades now, the growth in the UAE is one of the most important one on the planet. But the Saudis are doing even more ambitious and even much bigger. So it's a very exciting area. It's a very exciting period of time to achieve all the targets which has been announced in the couple of years.
Do you see this only in Saudi and the UAE, or do you see it also in the rest of the MENA region per se?
Well, the MENA region is quite a big part, but it plays a huge role in the hospitality and tourism industry. We are present very much into the Egyptian market, if you want to, right? This is another very solid historical market for our brand, H World International, very important. We see a lot of growth happening there. We see the markets were developed within some USPs. We have seen the Qataris who really focused on mega events, big events, sportive events, who has seen success. We have seen the Oman as destination, as country who has set themselves apart, right? Everyone wants to compete, but everyone has to really make sure that he has his USP properly set up. And Oman is a beautiful country, is a great country, but it's not for everyone and it's not for all kind of development. So you always have to fit the regional expertise to a global ambition, right? Don't come with a global vision and trying to impose anything. You have to have regional look into the development, have experts on the ground who support the growth, which is then profitable and sustainable.
Thomas, I saw a lot of hotel booths outside, so it's mainly hotels that are established abroad and they came here to the region and expanded in the region. But in your case, Jumeirah is a UAE homegrown company, so it's quite different and it has expanded abroad. What do you think was the key for establishing such a company here and if we want to say taking it out abroad across the globe?
I think first and foremost, as you have shared, Jumeirah is home to Dubai. Dubai is our home. We are an Arabian hospitality brand. Our origins are from here. And if you look in the first few years of trading, Jumeirah really was focused on Dubai, UAE and the region. But since then afterwards we have taken great steps. We operate 28 hotels globally, from London all the way to Bali, Guangzhou, Nanjing, and of course still a strong presence in the Middle East. I think when you look back in sort of the hospitality business 15, 20 years ago, you had large brands in Asia, Hong Kong based, one in Singapore, one in Thailand, and they have sort of conquered the world with their base. And I think what you see at the moment for Jumeirah, we follow a similar path. We have our humble beginnings, very, very clear to who we are, what we stand for, what we want to deliver, and take this and grow this globally.
What does this mean for also the UAE's commitment when it comes to the hospitality and tourism industry?
Well, I think to start with, obviously the vision, the leadership of the UAE, in particular for Dubai has, I mean, we all who have hotels here couldn't operate without Emirates Airlines and the airport. I think that's the starting point. But then again, having this vision and foresight from the leadership where the hospitality sector can grow, the infrastructure grow, the attractions can grow, so then you achieve success. And if you look 2 years ago, over 30% of the GDP was generated with hospitality and hospitality-related attractions, which I think is an incredible achievement in a short amount of time.
Mohannad, what type of investment structures could we see potentially for this cross-border investment in the hospitality industry? So how would it look like?
Yeah, so you have two types of funds. You have private funds that don't necessarily have limitations on cross-border investments. So even if it's based in Saudi Arabia and the strategy is to invest in the hospitality sector globally, then you have no limitation on that. Obviously, some tax implications would need to be taken into account, but that's an investment strategy. The other thing is public funds like REITs. REITs in Saudi can invest up to 25% of the net asset value anywhere globally. So let's say if you take SEDCO Capital REIT, for example, valued at 2.4 billion Saudi riyals, 25% of that can invest in a hospitality asset here in Dubai.
But how does it compare to the rest of the globe? When we talk about these investment structures, which ones do you see most popular here in the region and how do they compare to the rest of the world? Let's say the West, perhaps.
I think both private and public funds are gaining popularity in the region, specifically in Saudi. I think a lot of the stakeholders also prefer the structure now, including lenders, equity partners, just because it's more governed and then it's more liquid, right? Plus, it gives accessibility to a wide range of investors. So it could either be private funds or public funds.
And how do you see REITs in the region taking off as well?
So this is a recent phenomenon, I would say. I think in Saudi it started back in 2016, 2017. We now have 19 REITs. I believe that's slightly different in the UAE. I think there's only 2 or 3 here. But again, a lot of the REITs in Saudi are already investing not only in Saudi, but globally. UAE, GCC, and globally as well.
Siegfried, if we want to look at H World International, what's your investment strategy for these cross-border investments? So you have a very interesting story, Germany, China. Could you just tell us about it?
No, I'm representing, like Thomas, international hotel operators, and initially the investment was not the way of moving forward. And traditionally, all the international hotel operators has set up management contracts, franchise contracts, moved to managized contracts. But more and more, as the competitiveness of the region is going so high, you know that you have to find your USB and have to find eventually funds, REITs, in order to support ambitious growth in the region. And if you talk about the German and Chinese, just quickly, I mean, whenever we go somewhere, we explain we are the main feeder market is Germany and China. Of course, it opens already some eyes and ears in order to attract the tourists from that part of the world into the destination. In addition to that, the scale, which of course matters in whatever you do, we have that, right? And we can throw these figures, and whoever has been to China knows that the scale is just crazy. And we just reached 10,000 hotels in our portfolio. We just 1 million hotel rooms a day, over 250 million. So these figures are just mind-blowing. But for all of us, it's important that how we can benefit from this scale, from this power into the region. How can we support in terms of tourism, in terms of business, in terms of funding? And we have organized with our company as well road shows, road trips, not only to find hotels in order to be able to manage and help owners, developers to diversify their portfolio of hotels, but as well in trying to have creative ways of funding project and supporting the funds or the hotels and the projects, which are so many here in that part of the world.
So you see this region as a lucrative region when it comes to H World International?
It is a very lucrative region for us. You should know that so far we are looking after 32 hotels, right? 8,500 rooms, but there is much more to come for us. Lucrative as well because you have some parts of the world where the real estate industry or businesses is struggling a bit more, and we can see that with our home market, at least in China, where we are looking and we get very regular calls from colleagues out of China saying how can and where can we invest in this part of the world, which has been a global attraction for investors in order to come with their funds here.
Thomas, what are some key considerations you think of when you want to expand abroad or have some new projects across the globe? So what do you think of? Tell us more about what goes in your mind or through your mind when assessing these opportunities.
I think it's not too different than many of our competitors. There is probably a global, let's call it the wish list, where you would like to have your assets. I think the choice of these assets is multiple. One is because it's an important market where we want to establish a brand presence, but it's also a market where we can obviously leverage and increase feeder markets for our key assets, Dubai and Iran. So that's step one. As I said, this is a wish list. If you talk to many other colleagues of ours or competitors, they have the same. For us afterwards, the next step is really having a targeted approach into which of these markets we go in terms of order and what is available. Then the big discussion, the big decision, are we investing? Are we co-investing? Are we looking for a partner? Who is that partner? I think if you look at key strategic locations these days, I think we have to be realistic. It's very, very difficult to just go and court a fund, an owner, a family, and get an HMA. You need to invest, co-invest, participate in the investment. Are you better off to work with somebody who has expertise and experience and do a turnkey project for you? You can de-risk that. Are you better off to buy a dilapidated asset and you invest yourself? What's the risk, and so on and so forth. So I think these are key considerations along the way. But I think whilst we have this plan, we all have to remain very open and positive and have our sort of radar open to look for assets and opportunities which are not on our key plan, but which are accretive to our brand growth. That could be resort locations. There could be resort locations in places we haven't really thought of or are up and coming. We look at destinations, private islands. Is this something we should go after, which will help us to grow the brand with a very strong driver from a brand extension point and a PR point of view in order to be successful.
And what about asset-light models? how do you see them in the hospitality industry moving forward? Do you think they're better off than operating or starting the hotel from scratch?
I think key to success is if you have the opportunity to work with an owner, with a partner who can offer you both. I think in the case of Jumeirah, we are a wholly owned vertical subsidiary of Dubai Holding. Dubai Holding has assets which we manage, and Dubai Holding owns the brand. We have more hotels not managed, not owned by Dubai Holding. Why is that, and what gives us a key differentiator? We can talk to a future owner of a hotel. Some are experienced in this field and others are not. And we are looking at that hotel like it would be owned by us, because we have the expertise on the both. And I think that difference these days brings a lot of credibility to an owner, in particular somebody who maybe has one asset or two, or who wants to really start in the beginning. Signing a hotel management for 20 plus 20 years, plus 30, plus 15 years, that's sort of the terms we look at still. This is a bit like a marriage. You're not doing this for the next 3-5 years and then see what's happening. We want an owner to get to know us. We want an owner to work with us, that the owner invests time, money, effort, land, and so on and so forth. And we do the same from us with the soft skills, talent, systems, and so on and so forth. So that at the end of the day, we can open a hotel together, which will exceed the underwritings we have prepared, which is win-win for the owner and for us.
Siegfried, what do you think about what Thomas said with asset-light model?
No, I agree on that, and I want to just continue as well going on to that level. Financing of a project is one thing, managing its profitability is something else, right? And Thomas touched on all the different points in order to make a project successful. So it's super important what you just mentioned, right? It's not just selling an HMA or selling a deal to someone, it's much more than that. And one of the things that I would like to bring, especially in this part of the world, is the flexibility, right? We are initially a German company, so people believe Germans are not flexible, but it's not true. We are flexible, we can be very, looking into the partnership, right? Partnership is really about a partnership, and don't come impose ideas, impose things. We have 9 brands that we are developing. It's from economy lifestyle to ultra luxury. So we can really offer to the market and to the person or to the company or to the family different ways of developing and realizing their dreams, either as a trophy asset, which we have seen, or just as a business model who is generating an ROI, which allows for him to live comfortably and develop much more.
But how do you take the decision to choose which model?
Again, there is not one model which you can copy-paste, right? It really depends. You have to listen to the partner, what he wants, right? What his intention is. And I've seen many, many families, and like you guys, I'm lucky and blessed to here since 20 years. So I've seen many, many situations, owners, and all of us, we're here since long, so we know it, that you have to listen, you have to find the right formula, and I work on 10, 20 different formulas with different owners in different countries, in different regions. You cannot just copy-paste or something which is come from outside into that region. You have really to bring the expertise, bring the knowledge, and adapt the model. We are working on JVs. We work on strategic partnerships to roll out 10, 15 hotels. We work out a single HMA with families or a franchise agreement. So things are really open, but initially management and franchise at what we would like to do, but open for anything else.
Mohannad, what additional access point or advantages can funds provide for their unit holders when investing in the hospitality sector?
So twofold. I think the first one is obviously you provide access to a wide range of investors to be able to have exposure to real estate and hospitality investments. I think most individuals don't have the opportunity to invest in a hotel, but through a fund structure, that becomes a reality. The other thing is some geographies, maybe I'll speak about Saudi Arabia, but you talk about Mecca and Medina, for example, tourism-based economies. Until now, the only form of investment for non-Saudis into these two geographies are through fund structures.
Thank you so much. So I know this session is pretty short. It's only half an hour, so I wanted to open the floor for questions. If anyone has a question, to our esteemed panelists, you can raise your hand and we can give you the mic.
I think we have
Where was
one
the question
over
again?
here.
Yeah.
Sorry.
Front row.
Please say who you are and who the question's addressed to.
Hi, I'm Sud Iyer. I represent the coordinate delegation to FHS. Thank you very much for taking the time. My question is to both Thomas and Siegfried. I want to understand what are the various ways in which leading hospitality players such as yourselves are using strategic fund structuring to create competitive advantage for yourself and differentiate among the other big players in the industry.
I think from our side, again, we are a hotel operator, so I think that question is almost something you would need to address to a fund manager per se indirect, because it would not be us who run this model. This would be an owning company or a fund who has multiple investment. But I think, again, the difference of the nature of our products will allow different strategies. We haven't spoken about mixed-use asset. If you look in the Middle East at the moment, branded residences, how you can de-risk a development for an owner if you have the right brand, not just for hotel, but also for residences, and how this from a cash flow point of view can be very, very lucrative and interesting.
From our side, when we come over and meet all kinds of potential partners, then you say you come from China or from Germany, people believe you come with a big bag of money and put it on the table and can distribute it. It's not that way, right? There is funds available, and yes, we try to motivate it and try to bring it, but we have a separate entity, which is back in China, who is doing in all kinds of deals. It goes to mergers and acquisition, it goes to partnership, it goes to JVs, who has its pros and its cons, so it looks into that. So like Thomas said, we are initially a hospitality company, right? We're experts in managing others' assets to the best for the benefit of all stakeholders. That's what we are. We can add, and Jumeirah has similar, access to funds in order to add competitive advantage to the whole equation in order to find the right partnership with different parts of the Middle East, and we're very eager to develop in that path much more than what we do now.
Any other questions? So I think no more questions, and this is it. Thank you so much for my panelists for this lovely discussion.
Thank you, Paula.
Thank you.